Yeah, Bitcoin is it's a network and it's an asset. It's based on a protocol. Rooted in an ideology, and the network is emerging as the most anti-fragile, right, most robust, resilient, compelling settlement network in the world. I think I think David Marcus is doing really good work here at Lightspark on this, and I think that right now for this 4-year time frame, there's an explosion in capitalizing on the asset just because it can happen at the rate of 1 billion a month or 10 billion a month or 1 billion a day, and it's very straightforward.
The next financial gold rush isn't happening in Wall Street vaults. It's unfolding on the Bitcoin network, and the clock is ticking. Michael Saylor, co-founder and executive chairman of MicroStrategy, continues to push the narrative that Bitcoin is far more than just an investment. It's the foundation of the future financial system. While Bitcoin's price may remain volatile in the short term, with wild moves expected after the Fed's next rate decision, Saylor believes the real story is much bigger. He notes that Bitcoin is both a network and an asset, emerging as the most anti-fragile, robust, and resilient settlement system in the world. Capital is pouring in at staggering rates, billions per month, per day, and potentially even per hour, as companies and investors rush to secure their share of this digital gold. Saylor envisions a future where 40,000 banks and 400,000 companies operate directly on the Bitcoin network, settling peer-to-peer at the speed of light. Consumers and businesses alike could interact via the Lightning Network, paving the way for a pure digital economy. Imagine 10 billion AIs executing millions of transactions per second with final settlement, possible only through Bitcoin. Wall Street is taking notice, with analysts projecting corporate Bitcoin allocations could soar to $330 billion within 5 years. The message is clear: the Bitcoin gold rush is accelerating, and those who hesitate risk being left behind. We're still in the opening act of crypto's story. The most explosive moves are ahead. Stay tuned, hit subscribe, and turn on notifications so you don't miss the breakout when it happens.
Yeah, Bitcoin is it's a network and it's an asset. It's based on a protocol. Rooted in an ideology, and the network is emerging as the most anti-fragile, right, most robust, resilient, compelling settlement network in the world. I think David Marcus is doing really good work here at Lightspark on this, and I think that right now, for this 4-year time frame, there's an explosion in capitalizing on the asset just because it can happen at the rate of 1 billion a month or 10 billion a month or 1 billion a day, and it's very straightforward. But I do think it seems rational that you can reground the entire financial system and the banking system of the world on Bitcoin, the network. If we get to the point where 40,000 banks are all using Bitcoin and custodying their own Bitcoin, running their own nodes, they'll all be peer-to-peer trading with each other. You can imagine a banking system in the 21st century where you have 40,000 banks trading with each other on the Bitcoin network, which is the pure digital network, and the Fed wire is the fiat network, or the other traditional corresponding bank systems. And then you can also imagine you'll get to the point where you have 400,000 companies that are all peer-to-peer settling with each other. And so I think there's tremendous opportunity either to plug the banking network into it, or to plug corporations into it, or to plug consumers in it via the Lightning layer, or Lightning on top of Bitcoin. And so I do think it's critical infrastructure for a pure digital economy. If you ever want to get to the point where 10 billion AIs are trading 1 million times a second with each other, or you have 10 billion transactions a second between 10 billion counterparties, all with final settlement friction-free, it's clear it's going to be on something like Lightning, sitting on something like Bitcoin, and that is I think that's the basis of the 21st century digital economy. So I'm bullish. I just think it's more of a technology thing. It'll probably take 10 years before people start to see that moving at the same economic scale as they see the financial players moving to securitize the network. I think the trends are running independent of each other. You know, there's the technology move to how do we integrate 8 billion people, 10 billion AIs, 400 million companies, and every bank in the world to trade with each other at the speed of light. That's a technology thing. And then the Bitcoin gold rush is how long will it take for all those economic actors to capitalize on Bitcoin? But the point that I would make is it's a lot easier just to recapitalize a company on Bitcoin, right? You have $1 billion company, you recapitalize on Bitcoin, you're going to be a $100 billion company. It's one transaction, you're done, right? Whereas convert all of your economic transactions from the credit networks to a digital monetary network, that's going to take more than one transaction by two people. That's work, and there's going to be a lot of issues. So it'll take longer for that to happen, and the two things aren't really linked, right? This one's going to go as fast as it goes, and in fact, the faster the Bitcoin gold rush goes, then the more money there will be to support the transformation of all the payment networks and all the commercial digital commerce networks.
Bitcoin may be a $2 trillion asset today, but according to Michael Saylor, it's still the most underbanked asset in the world, and that gap is the biggest opportunity of our time. Michael Saylor notes that there is no paper Bitcoin being created, but natural selling continues as longtime holders cash out small portions to fund their lifestyles. With Bitcoin now a $2 trillion asset class, he highlights a striking problem: it remains massively underbanked. Unlike Apple stock, where trillions can be leveraged through margin loans, less than 5% of Bitcoin is financeable. Even wealthy early adopters face double-digit borrowing costs while being locked out of traditional banks like JP Morgan. With 85% of Bitcoin still in the hands of individuals rather than institutions, those needing liquidity often have no choice but to sell. Saylor believes this wave of natural selling is temporary, and once it's absorbed, Bitcoin is primed for its next surge. He also points to the mining sector, where the smarter play may be holding Bitcoin directly rather than sinking billions into depreciating hardware. Borrow at under 10% and reinvest into an asset appreciating 30 to 60% annually, and you create a capital amplifier. The message is clear: Bitcoin isn't just money, it's the financial rocket fuel of the 21st century. The window to position ahead of Wall Street is closing fast. Let's get back to the interview.
I don't think there's paper Bitcoin generated. I think that there's a lot of people that own Bitcoin at 1,000, and when it got to 100,000, they're starting to sell 10% or 5% in order to live. Because I think the situation right now is Bitcoin is a $2 trillion asset class, but it's an underbanked $2 trillion asset class. So if I had $2 trillion worth of Apple stock, I could get a margin loan, with a 50% plus advance rate at SOFR plus 50 basis points, and I could finance $1 trillion or $1.5 trillion of it. And right now, if you look at the amount of Bitcoin that's financeable, it's like not even 5%. So if you're an OG crypto holder and you got rich and you're a billionaire on paper, you might be able to borrow money at 12, 13, 14% interest, but you got to jump through hoops and you can't get it from JP Morgan. So for them, if they want to buy their whatever house, jet, put their kids through college or whatever, they're going to sell. So I think there are people that have held, from 2013 on, and they're at a point where if you were to say to me, what's your forecast for when you'll be able to borrow against your Bitcoin at SOFR plus 100 basis points from JP Morgan? I'm not thinking in the next 12 months or next 24 months or next 36 months. So I think most of the Bitcoin is offshore, not institutional. Like, what percentage of Bitcoin is held by iBit or my company or Wall Street? Not 10%, 15%. So it means 85% of the $2 trillion is held by individuals, and they can't get a loan. So I think that crypto companies, crypto holders, whatever, if they want any liquidity at all, they have to sell. And then I think there's a lot of hedging and a lot of people, vol traders, and they will sometimes sell. But as a general rule, I think we're boiling our way through this point. You know, the natural sellers are getting the liquidity they want, and at some point we'll be done with all the natural selling, and Bitcoin will surge up again. If I had a mining company, I'd take it public, I'd capitalize it on Bitcoin, and then I would start issuing equity and credit instruments to buy more Bitcoin. I'd do it as fast as I could. And it's kind of simple. You're either going to invest $1 billion in hardware that's depreciating 30 or 40% a year, or you're going to invest $1 billion in Bitcoin appreciating 30 or 40% a year. So I would definitely do it. You know, why don't they do it? Your board of directors might be conservative. Maybe the management team's conservative. Maybe they're trapped in other circumstances. Some can't go public. Some can't finance. Everybody's got their own reasons or issues. Some miners are better at it than others. But I think you're in the Bitcoin industry. If you're a Bitcoin miner, you have to believe Bitcoin is going up 30 to 60% a year to be in the Bitcoin mining business. And so once you've agreed that it's going up 30 to 60% a year, then borrow money at less than 10% and invest it at 30 to 60% a year and recycle that, and you've got a capital amplifier. Yeah, I would do it in a heartbeat.
The Lightning Network is proving itself as the most efficient way to move value across the digital asset ecosystem, offering speed, scalability, and even yield without requiring holders to surrender control of their Bitcoin. As adoption expands, Bitcoin is solidifying its role as the backbone of a digital-first global economy. Volatility may dominate headlines, but beneath the surface, institutional capital, deeper liquidity, and smarter strategies are quietly building unstoppable momentum. The shift is no longer theoretical, it is unfolding in real time. Those who position early will ride the wave of the next great financial revolution, while those who hesitate risk being left behind. Will you be an early mover riding Bitcoin's next wave, or will you watch from the sidelines as the future of money passes you by? Crypto doesn't wait. Drop your thoughts in the comments, share this with your network, and hit subscribe with notifications on to stay one step ahead.